Hey, oh, excuse me. Hey, everyone. It is Thursday. And guess what that means? It is the sometimes on Thursday, sometimes on Saturday financial thing live stream coming to you live from, you can't see out the window, but a beautiful blue sunny sky day here in Orlando, Florida, in the United States of a mess of America. Hope you're all doing really well. Apologies for not being here consistently for the last week or so, but there's good reason for that, which I won't get into, but maybe I will get into it a little bit later. We are going to talk a little bit about investing, peer-to-peer lending tonight. Wherever you are in the world, thank you for tuning in. What are we going to talk about? Well, actually, to be honest, the peer-to-peer lending news has been really quiet as of late. It actually, to me, has been one of the more stable parts of the finance world. We would never have thought that years ago. Two years ago, we would never thought that peer-to-peer lending would be so stable. Of course, not 100% stable. There are certainly some issues going on in the sector in certain companies, and we're going to talk a little bit about that. I have been getting a lot of questions about crowd property recently, and I came to a bit of a decision myself about what to do with crowd property, and so we're going to talk a little bit about crowd property. What else? We're going to talk a little bit about assets capital too, some loan pad stuff. And then a couple of questions from the mailbag too. We'll take a look at the Trading 212 portfolio. It has been an absolutely rough couple of weeks in the stock market, absolutely bipolar. Yeah, it's been rough, I'm not going to lie. So the portfolio has definitely taken a bit of a hit, but as they say, when there's blood on the streets, opportunity meets. I don't know if they do say that, but I just came up with it. There are certainly some opportunities out there at the moment to buy things on a discount. And of course, when things are all going into the red, everybody's doom and gloom. Oh, the markets are crashing. We don't want to buy anything. Everything's bad. But I just see that as opportunity. So we'll talk a little bit about that too. But anyway, thank you for joining. We are hopefully not going to be on too long this evening. We'll get through all the information. If you have any questions or comments, please feel free, shove them in the chat. If you want to subscribe to the channel, if you want to become a Patreon member, the link is in the description in YouTube. Just thank you for the support to everybody who's been a loyal Patreon member for several months, even some years now. Thank you so much. Every little bit helps. And of course, Harley is here, the official dash hound of the Financial Thing channel. She is still sponsoring along with Del Boy and his crew, but we are working on getting a new sponsor for the YouTube channel, which is going to be highly important because obviously bills have to be paid, but that is in the works. Anyway, how do you like the lighting? I've kind of worked on the lighting. I think it's better now too, so let me know if the light looks good to you. Does it sound, are we sounding good? Are we looking good in the lighting? Hope so. Quick hi to everybody who's in the stream. Peter Vince, of course, in Leatherhead. Hopefully the weather is nice to you there. It's glorious spring weather, beautiful. It's a nice time of the year to be in England in the spring. I'll be heading over in May to the UK, so I'm looking forward to it. Hopefully no rain, please. Hi from David Dawson in Staffordshire. Chimpo Naughty is here. Alabin Iron from a chilly grey Spain. Mike Powell is here. Dave Allard. Evening all. Nice to see you. Thanks for dropping by and spending a little bit of time this evening. Oh, I did. Also, there was another thing I wanted to pull up. I'm going to pull it up on my web browser so I don't forget to talk about it. Seems there was an update at the beginning of March about Wellesley. I don't tend to follow Wellesley as much because again, it's not something I was continue to be investing in. Thank goodness I got out of there before that one bit the dust, but I do sometimes read things on Facebook about it. So there's an interesting Facebook post in the Wellesley Investors Action Group, who's I'm sure some of you are members of, so we can take a look at that too. Let's get right into it. And two, if there's anything you want to chat about or discuss, put it in the chat. I will certainly look into it. Let's get this going. Let's go full screen. Come on. I got this new Mac, by the way. If you're looking for a computer and you wanna get a new computer, I got to tell you, this Mac Mini, the new Mac Mini, the M4, is by far the best computer that I've ever owned. It is tiny. I mean, it literally fits in the palm of the hand. I show it to you, but I got it all connected up with wires. It's lightweight. It's so fast. I got the Pro model. It runs cool. It's portable. I could just take it if I need to go somewhere and work or go overseas with it. I can plug it into a monitor. It is absolutely amazing. And you could pick them up for even just the base models, which are going to be fine for 95% of the people. I think, about £499. And it is it's a little supercomputer. It's so fast. It's faster than any computer that I've ever owned, including Mac Pros and the big industrial Mac computers. It's really revolutionary, so highly recommended. A little plug there for Apple products. Anyway, interesting. The difference between what peer-to-peer lenders seem to earn in Europe and the UK is quite substantial. Here's another example of that. Lender market investors earned 15.9% on average in 2024. That is pretty amazing. I don't know about lender market transparency. I'm not invested through them. But they say they saw 68.5 million euros, that's 57 million pounds invested in the platform, bringing the cumulative investment since inception to more than 456 million euros. And investors earned more than 8 million euros in interest 2024, bringing the cumulative paid interest since inception to over 24.7 million pounds. They've got more than 17,000 investors. This seems like an ad for a lender market, but I think, it's really interesting. The risk reward ratios the European peer-to-peer lenders seem to be offering compared to the UK is really high. You can go on places like Mintos and Bondora and find very, very high interest rate deals on loans. Of course, you are going to be taking, I think, in my opinion, more risk. But with more risk comes hopefully more rewards. They originated more than 172,000 loans with a total value of just under 100 million euros in 2024. I'm imagining the lender market is obviously an aggregator. They're not issuing 172,000 loans themselves, so probably similar to Mintos. But a very, very outstanding year, I would say, for a lender market. And hopefully it continues, because when one peer-to-peer lending company does well, it creates positive media, positive interest in the industry as a whole. So I like it. Let's look at Fourth Way. This is their peer-to-peer and direct lending index in December 2024, which unfortunately said it had the most write-offs since July 2014, about £4 million of write-off loans. But it says the interest paid on loans outweighed that amount, so the month was still positive. So that's December 2024. That nudged up the year. The year's return to end on 7.61% after costs on all losses. Again, that's an aggregation of several peer-to-peer lending companies. Capital Rise, Crowd Property Investment Fund, Cufflink, LoanPad, and Propland. It'd be nice if there was more companies included in this index, but it's a good start. You can see here the rates. Capital Rise at 9.1%, Crowd Property 9.87%. Again, we're going to talk about Crowd Property later tonight. Investment Fund 8.88%, Cufflink 8.75%, LoanPad 6.3%, Propland 8.44%. So you can see here Crowd Property with the highest interest rate as reported on this, and then followed by Capital Rise at 9.1%. Pretty good rates. I think that index is relatively interesting, although obviously Fourth Way is relatively biased compared to, obviously towards peer-to-peer lending, because that's their business. They say number of calendar years with positive returns. Peer-to-peer and online direct lending, 10 out of 10. Stock market, 7 out of 10. I don't know what that means. 7 out of 10 what? Is that their score, or is that the amount of years? I'm presuming that's 10 years, the last 10 years? Who knows? Longest streak, peer-to-peer and online direct lending. That's the longest losing streak, 0 years. Stock market, 6.3 years. I'm sure if you took the stock market returns as an average over these peer-to-peer lending rates, the stock market would be higher depending on which stock market you invested in. But, if you invested in obviously the S&P 500, those rates are going to be, I would imagine, somewhat higher, usually 11 to 12%. But kind of an unfair comparison, I think, comparing peer-to-peer with the stock market is not really apples to apples at all, but it's interesting that they use that anyway. So what I'm concerned about is this line right here. December 2024 had the most write-offs since July 2014, and I think that is just a direct correlation between what is going on in the economic world. Things are not particularly good at the moment, even though media would paint a very rosy picture. Personally, I don't think it's as rosy as it is, and I think there's a lot of unknowns going into 2025 in the economy. I think you may see a lot more write-offs coming from private lending, things like peer-to-peer. The companies that have lent correctly and have lent in the right way are going to be fine, and then we'll talk about maybe one or two other companies that might not have been doing that. We have a Cufflink news flash that came through. With just 1 month left, Cufflink writes, till the end of the year for taxes. Now is the perfect time to make the most out of your tax-free allowance. Anybody out there who doesn't take ISAs and use them, it's a bad idea. You got to use your ISA. It's a really good vehicle. Especially in the UK, you get £20,000 tax-free allowance for an ISA. In the US, we only get, I think, 6,500. So you're lucky. 20,000 is amazing. So make use of it. Take advantage if you want. You can open a Cufflink IFISA. And good news. Look at this. As of today, we've launched new rates for our automatic auto IFISA. And I'm presuming this is the same for regular and ISA, judging by this line right here, our auto IFISA. So 10.26% you can get on a 2-year auto invest product right now. You can see the rates down here. 1 year 9%, 2 year 10.26%, 3 years 8.51%. That is looking pretty like a pretty juicy auto lend rate in Cufflink's product. Whether you want to tie your money up for an extra year at 10.26, so you're basically getting an extra 1.26%. I certainly, for the 3 year, that's a no for me. Sorry, Cufflink. I'm not going to tie 3 years money up for 8.51 when I can get a 1 year at 9, have more flexibility, because no way to exit that if you need the money. So, but yeah, do your due diligence. Those rates, that 2-year rate's looking pretty nice. We had a February investor update from House Martin talking about the macro front of the Bank of England cutting their rates by another 0.25% in January. House Martin remains confident that further cuts will follow this year. I'm not so sure. I don't know. We'll see what the inflation rate is standing at. I think you might see static rates for interest for the next 6 months. Maybe, could I put a guess out there, the crystal ball, that we may see a rate increase? Who knows? We'll see. The Office of National Statistics reported an 8.7% increase in average UK private rents over 12 months to January 2025. It is getting more expensive to rent properties. It's not helping the property market, helping landlords, but not helping renters. Now, House Martin is also pleased to introduce a new manage multiple bank accounts feature where you can register up to 3 bank accounts, any of which can be used for deposits and withdrawals, offering greater flexibility in managing your House Martin funds. That's a pretty cool. I think maybe they're the only ones that I've heard of to be able to offer where you can have multiple bank accounts linked up to your account. I could be wrong. I've only ever linked one, but that's pretty cool. They have a property pipeline coming, 12-bedroom block of flats on... Wait, hold on. Let me read this. We're progressing with the acquisition of a property on Hornby Road in Blackpool, intended to address local homeless issues. Blackpool faces a significant homelessness challenge. Approximately 341 people and 157 children were reported homeless in the area. The selected property is a 12-bedroom block of flats on Hornby Road, recently leased to Midlands Living CIC. So are they buying the entire block of 12 flats? That'd be interesting. It's a 15-year fully repairing and insured lease. And they're also progressing with the acquisitions of properties in Kennelly, Crescent, Richardson Close, both in the great city of Leeds. It says both properties have title issues that are being actively worked on. Blah, blah, blah. Unfortunately, the purchase of the Mears property on Front Street is still being delayed due to planning issues. And the purchase of 3 properties on Nottingham Road have also hit some delays after roof investigations. The roof requires repair and it needs a new roof, seems like. They are releasing new features on their website, multiple bank accounts, as we spoke about, improved account split visibility, and sell order price cap displays. I don't know. I'm just not reading what's on the page today. The maximum price cap for a property is now shown when entering a sell order. And you can see here, we got 1, 2, 3 properties in legals, 1 sold, funds distributed to investors. A rate yield boost on Newton Abbott. This is all very positive things. I got to tell you, I do like what House Martin is doing. I think they're on my radar now. I think they are. If you're invested in House Martin, put a comment in the chat. I would like to know how many of you are, and what is your experience been? Has it been positive? Is there anything that you would tell me as a House Martin investor to say you should watch out for this, or yes, you should definitely invest? I'd like to know. I'm looking for another peer-to-peer lender to deploy some funds. House Martin is definitely on the list. As is Blend. I've spoken about Blend before. I'm a little concerned about cash drag, how fast the loans fill. I feel like House Martin might be a place that would be easier to get an allocation. I could be wrong about that. And then Easy Money too. That's another consideration. But I do consider LoanPad and Easy Money to be quite the same product. And I don't necessarily want 2 of the same. So maybe it's House Martin. We'll see. I've been getting a ton of emails about crowd property asking me, what are my thoughts? People are concerned. Obviously concerned about the defaults, the delayed loans. So I thought, let me log into my account, take a look at what's going on. I don't log in as much as I should because I don't have a huge portfolio invested in there anymore. So I thought, let me log in. I'll show you exactly what I have in there. A little bit less than 200 pounds now. Average realized return 8.54% with the current contract rate 8.38%, well below certainly what that fourth way was showing of 9.87. So I'm below that. But I've to be honest with you, I've been withdrawing bit by bit out of crowd property, and I was a little concerned when Mike Bristow stepped down. It's been really nice to have that connection with Mike, and so to be able to get the insight and information when I could, to have him come on the stream. And when Mike stepped down, I asked Mike, hey, could you come on the stream? Would you be able to talk about crowd property? He said he'd prefer to let things just die down a little bit before he did, and maybe towards the end of the year. It was at that point I thought, is this a good time to stay invested in crowd property, even though I had a relatively small investment in crowd property? And what I've decided to do is to run the account down. And here's the reason why. First of all, because of the CEO change. Not to say that's a bad thing. That might work out to be a very good thing. Time will tell. I don't know what the answer to that is. But this is obviously the more concerning thing to me. And if I had a bigger account, I'd be more concerned. Right now we have, so out of my 700 pound investment in here, 278 pounds and 15p. That is about about 40% of the portfolio is now 12 plus months overdue. That's not a good sign. I did have good hopes that this would be sorted out. I don't know how many of these loans are going to be sorted out, but I also have more here, 271 pounds, 1 to 3 months overdue. So we've got a total of, what's that, 540, is that right? 540, 640? Am I getting my mathing? Am I mathing correctly? 540 plus another 50. It's about 600 pounds out of 699 pounds now, give or take, overdue. And that's never a good thing. I mean, let's be honest. I like Mike Bristow. I like crowd property and what they were doing. But at this point, nearly my entire portfolio is either overdue 1 to 3 months or up to 12 months. That doesn't make me feel good. This is a reason why I say just be careful putting too much into any one peer-to-peer lending company. I've done it myself. I am guilty of doing it. But in this case, it's not looking great. So personally, and again, do your own due diligence. Maybe you are comfortable staying in it, but I've decided not to continue to put any further funds into crowd property, and I'm just going to withdraw whenever anything comes back. And whether it will or not at this point, I don't know. I hope so. I'm hopeful. But it's certainly not the outcome that I would hope for crowd property. I hope they can turn it around. Again, I haven't read through every single loan and all the notes to know what's going on with every loan. Hopefully some of them are going to be sorted out. I'm sure some of them won't. But, that's just my personal decision. So make of that what you will. It's not financial advice. I'm not telling you should do the same thing, but it's definitely concerning when you see that much of the portfolio in arrears, overdue. It's not a good thing. Moving on. And tell me, if you're a crowd property investor, what are your plans? What are you thinking? What are you going to do? Are you following the same path? Are you going to stick it out? Lend, invest. still have some money on the LendInvest platform. It's pretty easy. Set it and forget it. They put out a January newsletter. I always like reading through this because it's good to see what they're doing on the self-select side, which I am in the auto-select. But they say they have introduced 8 new investments on the self-select platform, so they're still continuing to get new lending out there. They are they put on January a residential property in Sheffield. Borrower is completing light refurbishment work before transitioning to buy-to-let refinancing option. You know what I like? Do you know what I like about LendInvest? This is important to me. They're a very, very big company at this point. They have a multi-billion-dollar loan portfolio. And I think their peer-to-peer retail side, it's not peer-to-peer, I know, but their retail side of investing is probably quite small compared to their institutional side, but they still continue to put out these newsletters to inform their smaller target audience, which is the retail investing side, what is going on with the company. And I appreciate that. I really do. Let's see. As a part of our commitment to maintaining higher standards, you must go through the regulatory due diligence check. So you got to do that questionnaire every once in a while. What else? Let's go down and look at the statistics. Self-select platform. Number of investments for January 8. Average investment amount, 107,000. That's the average size of the tranches for the postings in January. That's not the entire loan amounts. That's just the tranche. Average return offered 8%. Pretty good. Average loan to value 74%. So kind of standard in lending. And then you can see here, this is the map of the January investments. Most of it up in Scotland, Yorkshire, and the Humber. East Midlands and then West Midlands for a grand total of 858,814. On schedule, okay, 73%. In arrears, 10%. That's a borrower is not servicing the loan and has missed 2 or more interest payments of 10%. Out of term, these are the bad ones, the red ones. 13%, and then 4% enforcement. That's legal actions to recover the debt. So 27% either in arrears, out of term, or in enforcement. The thing I do like about LendInvest is they're a pretty good recovery team. So I like to see these on schedule numbers more in the mid-80s. Or actually at 100% would be great, but that's not very realistic in property lending. So a little bit low on the on schedule, but they continue, I think, to be okay. Typical target returns 7.5 to 8.75%. So that is pretty nice. It's decent returns, especially as we start to see these interest rate cuts. You're going to start to see savings accounts go into the very low 4s or 4% or less now. So getting 7.5 to 8.75 is pretty attractive. So that's the LendInvest update. I wanted to also log into my Assets Capital account. This is, again, not the best outcome for peer-to-peer lenders, but I have been receiving cash back in this account. You can see right now I'm at £554 of money that is left on the platform invested. I put quotes around that. I've got a bit of cash on the platform. I don't want to withdraw it because they're going to charge a fee, so I'm just going to wait till their free period goes. I did a withdrawal just a few days ago, of course. Got another payment. But yeah, the loans, I mean, obviously there's a lot of loans that are in default. We had a update. This was the quarterly update in, I think it was January, and it said here, where is it? default 18 loans, right? 18 development loans and 53 other loans in default. So we got a total of 71, right, out of 166 loans in default. And it made me wonder. Look at these statistics down here. 39 loans with an outstanding loan capital of £14.3 million listed as irrecoverable on the lender's dashboard. 21 loans, £13.9 million that are in secondary status. That means involving personal guarantees, which, let's face it, usually not worth the paper they're written on. Either before in litigation or waiting any dividend outcome. So I would imagine most of this 13.9 million will also go to irrecoverable. So that would bring a total of almost 28 million pounds. 28 million pounds of loans that Assets Capital wrote that are probably either already have gone bad or are going to go bad to the point where you may not get any of your money back. And it makes one wonder, doesn't it? How on earth do you write 28 million pounds of bad loans with the expertise that Assets Capital supposedly had? And I visited Assets Capital a couple of times, and I talked to some of the people that work there, some of the people that were in charge of underwriting, doing due diligence on lending. And they had me fooled. They did. They seemed like they really knew what they were doing. I was impressed. Every time I would go in there, I was impressed by the people that I spoke to. And then I read those statistics and I think, how on earth do you write 29 million pounds of just really bad loans? Is that the story of the economy in England? Is that the story of the depressive economic conditions that are existing in the UK? Or is that a result of just incompetence when it comes to writing loans, where you just wrote that many bad loans? 70 plus bad loans. And it makes you really, really appreciate the companies that are operating within the peer-to-peer space now, who I think are doing a good job and are writing loans that are good loans, that are solid loans, that have good guarantees and good equity behind them. You know the companies I'm talking about. I don't need to go down the list, but when you compare the companies that are operating well now compared to Assets Capital, I'm sorry, Stuart Law, but this is just the facts. They're right here on paper. All these bad debts. It makes me very thankful of the companies that are doing a good job now. And I'm grateful that I didn't sink a whole ton of money into Assets Capital. I hope you didn't too. I hope you were diversified. Again, another example of why diversification in peer-to-peer lending is so important. In fact, LoanPad, they had a really good article, and we're going to talk a little bit about diversification, but if you go to LoanPad's blog, they have a really good article on where peer-to-peer lending fits in a diversified portfolio. And it talks about the importance of remembering that your capital is at risk. We've seen it over and over and time again. And why you need to select not only different peer-to-peer lending companies, but also different loans within those companies, if you can, to be properly diversified. So go take a look at that article on LoanPad's blog. It's really good. It's a constant reminder when I start to get too invested into one company, too heavy weighted, which honestly I am right now, probably in LoanPad itself. But it's a good reminder of why it's important to stay diversified, because situations like this that is happening in Assets Capital happen even to the companies that we don't think it's going to happen to. 5 years ago, people were generally pretty high on Assets Capital, and nobody thought that things were not going to go really badly there, and it did. So, it's a good thing to keep in mind. Moving along. Let's take a quick look at this Facebook post. Not you, Harley. Sorry. Yeah, if you follow the Wellesley Investors Action Group, there's a really good posting by Steve Pollard, who is one of the admins. I don't know Steve, but I do know some of you are actually in the action group who are in the chat right now. It says Neil Taylor, Mark Rothwell, Steve Pollard visited the FCA headquarters in Stratford. Bravo, Steve, for going and showing up for your fellow investors and taking your time to do that. They were introduced to the project manager overseeing the investigation into the Wellesley Group and to Teresa Chambers, who led the meeting, who was the main legal representative for the FCA in the matter. The FCA were fairly contained in what they could and would tell them, but they do, to summarize in this article, say that they are going through this investigation that is quite lengthy, and the investigation is probably going to take another 12 to 18 months to complete. These things are slow. I mean, the FCO is obviously looking, my opinion, probably they're looking for certain fraud. Has anything fraudulent happened? It's obviously a scandal that's happened over at Wellesley. It's a wonderful name too, isn't it? Wellesley. It just presents such stability and good business sense. But obviously that was not the case. So if you're a Wellesley investor, or even if you're not and you like to read about these types of things, go to the Wellesley Action Group. It's Wellesley Investors Action Group on Facebook, and keep an eye on what's going on there. It's pretty interesting. Unfortunate, but interesting nonetheless. Let's go to the mailbag, as we do. The mailbag. It's mailbag time. Can I do that? Is that okay? Is that okay if I do the mailbag? There's a funny one this week. But firstly, starting out. Hi, Lawrence. Spell my name with a W. That's okay there. Forgive. I'm a 32-year-old. I want to start investing in the stock market. I will have a lump sum inheritance to invest soon. I'm very confused what to do this morning. Should I buy shares with it one go, or is there a better way? Wow. People, if you're going to send emails, spell check, please. Why are you confused what to do in the morning? It's pretty easy. You get out of bed, go to the toilet, brush your teeth, comb your hair, put some deodorant on. Maybe you take a shower. I don't know why you're confused about the morning. I'm pretty sure you didn't mean to write that. Should you buy shares with your inheritance in one go, or is there a better way? Just for some context, I have a small car payment, very small mortgage payment. Lucky for you. Other than that, no debts to pay off. I have some savings in the bank also to cover emergencies. My job pays pretty good, but I do not have any type of pension pot or an ISA. Looking to get started now, albeit a little bit late in life. Any guidance you can offer would be most appreciated. Cheers, Andy. Inheritances are a funny thing. You know, they can be a very, obviously a big blessing for some people and a curse for others, because if you're not educated in finance, you don't understand what to do with money. The way it can be a bit of a curse is if you get an inheritance, you run off to a financial advisor, they put it in the wrong investments for you, and you know, it doesn't do as well as it could. On the other hand, you have to be grateful about inheritances. Is money that was never yours to begin with, and you get gifted, and you should be a good you should do good things with that inheritance because it was blessed to you. So this guy Andy here, 32 years old, that's one of the most difficult decisions. People get a lump sum of money and they think, don't want to put it in the stock market right now. Everything's really high. I'm afraid if I put it in, it's going to drop. So there's two things. First of all, you have a small car payment. I would tell you to pay off your car, pay off your debt. Interest rates can be quite severe on cars, especially used cars, second-hand cars. People are paying 7, 8, 9, 10, up to 20% interest on car payments. you're not going to make that money in the stock market. You're not going to make likely 15, 20%. So pay off the debt. I think that's a good thing. Your mortgage, not necessarily something to pay off, but you could pay that off too. I don't know how big your inheritance is. But mortgages are kind of one of those things we tend to keep for as we get into our older years and try to make the most out of the money. Again, depends on your interest rate. If your mortgage interest rate is low, I don't think there's anything wrong with keeping it. You have money in the bank to cover emergencies. Definitely start an ISA, 100%. Take advantage of that £20,000 stocks and share ISA, or the cash ISA if you want to be more conservative. But I think stocks and shares at 32-year-old is the way to go. As far as the lump sum is challenging. It becomes more of an emotional issue. Again, looking at the markets, especially now, we've seen things just be so volatile in the last couple of weeks, up and down, up and down. The market looks like it's doing something really good, and next thing you know, I mean, look at the charts, just boom, boom, up and down, up and down, up and down. This is the hour chart. Look at this, how crazy the hour chart is. Is this with the 1 month? Let me see. Let me reboot this. This is look at the 3-month chart, how the drop here, and you think, oh, we're getting a bounce back and then drop, and oh, we're getting a bounce back. It looks like the Swiss Alps. And this is where we are right now. We've had this just drop. And it's hard to go ahead if you're at these highs right here, to go ahead and emotionally put in a lump sum of money. Even though I think if Andy, who's 32, comes back in 20 years, it's not going to make much of a difference to him. Because these numbers will probably be sky high. The S&P might be 12,000 points in 20 years. We don't know. What I've been telling people is if you're not comfortable putting in a lump sum of money now, I think it's actually a great buying opportunity with these pullbacks we've had. You know, what is that? 300 points, so 5%. 5% pullback. Yeah, I think it's good. I've been having a nibble. I've been investing as I normally would when I get some extra cash. But if you're concerned about putting everything in one go, just put some in every day or every week. Divide it up into 6 months. And just cost average in. Pound cost average. Pretty easy. Now you don't have to worry. You'll hit some of these highs up here. You'll hit some of these lows. And you'll average out in the middle. There's nothing wrong with that. But if we look at the long term, what the S&P tends to do, don't know why it's... Show me the low. I want to see. Show me the low. There we go. Come on, TradingView. If we look at the long term, they say when in doubt, zoom out. This is what you're going to see. 5 years. Up, down. Up, generally. Hopefully this is what we continue to see. I will say this. Nobody knows nothing when it comes to the stock market. It is a bit of a gamble. Long-term history has shown it rises up. But are we going to have long-term gains forever? Who knows? Everything is volatile. So I would say for you, Andy, if you're uncomfortable putting it all in one lump and then forgetting about it, just put a little bit in every day. Put a bit in every week. I don't know, again, how much you have, but I would say that's not a bad option. There are a lot of studies which show lump sum investing over the long run is better than cost averaging in over a period of time. Will that always be the case? I have no idea. I'm more of an average person. I put in when I have, so when the markets are bad, I put in. When they're good, I put in. If I have it to put in. That's my answer. I hope that answers your question, Andy. Here's a funny one. This one had me kind of giggling a little bit. Golf clubs, should I? Question mark. This probably sounds... This is probably a really silly question, but I want to treat myself to a new set of golf clubs. They're £1,000. I've been diligently saving for the last 20 years of my life and can certainly afford the golf clubs. However, I feel an immense amount of guilt treating myself. What's the thought process behind treating oneself? Anyways, again, probably a silly question, but one that has been weighing on my mind a lot. Thanks, Pete. I used to be the frugalist, frugal man on the planet. I would find it very difficult to go treat myself to anything. And the thought of spending £1,000 on a set of golf clubs would horrify me, because I would think, well, that's £1,000 I could save or invest. But I will say this to you. The reason I was away this week, because one of my loved ones, family member, was diagnosed with advanced stage cancer. And this is why I stopped being so frugal. Because there is no guarantee how long we're around for. There's no guarantee that we're here for 20 years or 2 years. Things happen. I think it's important to enjoy life responsibly. If you have £1,000 in your bank account, yes, absolutely irresponsible to go and spend £1,000 on golf clubs. Right? If you have 100 grand saved, I don't think it's irresponsible to spend £1,000 on some golf clubs, because you have to enjoy life, because you don't know what is around the corner. So my answer to you, Pete, is go buy the golf clubs today. Stop worrying about it. You're probably going to keep the golf clubs for 10 years. I know when I had a set of clubs, I kept them forever. So 10 years, £1,000. So you're paying £100 a year for those golf clubs. That's £8 a month. Go enjoy the golf clubs. I'm sure you'll get tons of enjoyment out of them. And don't worry about this kind of stuff, because, again, you could be driving down the road today. I hope this doesn't happen to you, Pete, but it happens to people. They get hit by cars and they're not around anymore to enjoy life or anything. So go enjoy your golf clubs. I don't know why Pete was asking me these questions. I mean, I'm not exactly Dave Ramsey or anything, but I think it's funny to get emails like that sometime. Usually most of my emails are about what's going on with Crowd Property. Can you tell me if they're going to go out of business or not? You know, what's going on with Lendy, blah, blah, blah. And that's nearly all the emails I get. And then occasionally I'll get these diamonds in the rough of an email. That's why I put them up on the screen. And I was given the okay to do that, just in case you were wondering. I don't put up anything that somebody has not said it's okay to put up. Let's talk a little bit about, should we look at the trading 212? Let's do that first. We've had a bit of a beating in the trading 212 portfolio. Right now, 26,061 pounds. You can see here we were up to, let's look at our 1 year chart. Little hair under 29,000, so not terrible. I mean, not terrible. Our 1 year we're at 9.7%. Hey, pay attention to that rate of return. I'm going to show, sorry, here's the screen. Pay attention to this rate of return here, people. Because I keep trying to hammer it into your brains that index trackers are the way to go. You're not going to beat the markets trading stocks. 9.7% for a 1 year return is almost certainly less than the S&P 500. Me messing around with this trading, I could have just put it in the index tracker and left it. But that wouldn't be entertaining, would it? This is why I do this, to show you. I cannot beat the markets most of the time. Over the last 3 months, I'm down minus 14.1%. Last month, down 9%, almost 10%. And today, we're basically flat. What is going on out there? Look at our micro strategy. Back over 310 now, but we were down. We were down and out with micro strategy. Look at this. $224 within the last 2 weeks. Volatility to the max. And I love the volatility. The S&P, our trusty S&P 500, look at this, 0.73% in the red. We were up 10% in this just recently, up here, 93 pounds. Now we're down 85. Buying opportunity. Our trusty NVIDIA. I sold some NVIDIA. I wanted to show you that. before earnings, I just had a bad feeling. And again, this is just straight gambling because I don't know anything. But I had a bad feeling that even if earnings were good, Nvidia was not going to do well that day. So I sold right here on this was the day of earnings, £1,000 worth of Nvidia stock on the 26th of February. Okay, so here's the transaction result, up £276. So it took a little bit of profit. And of course, what happened on the 26th of February? I'm going to show you. Where are we? Come on. Maybe I got to go to the month. Here we go. This was it. This was the day that Nvidia announced doubling their profits. And look what happened. Bang. Straight down. But we're still 14% in the green. I don't know what's going to happen with Nvidia stock. I have no idea. I know AI is all the rage, but look, it's down 4.75% today. The whole tech market is not doing well. Tesla, 23% loss right now in Tesla. Also down today. The whole tech market is getting hit. I still believe Tesla is going to sell a lot of the new Model Ys that come out this year. It's the best selling car in the world. We'll see what happens. Not financial advice. I don't know what's going to happen. And I'm 23% down. So I did actually buy some more today because I'm a glutton for punishment. You can see here I bought on the 3rd of March. I bought on the 4th of March. And I bought today. And I bought on the 13th of February. So there you go. And then Amazon, again, getting hit with this negative tech withdrawal, minus 4% today. We're up about 7%. Still got £3,600 in cash. Do you think it's a good day to deploy? I don't know. The way the markets have been, the volatility of the markets, I am not certain that right now is a good time. But I, again, have been nibbling away at this volatility. You can see, let's look at the last 5 days. Show me the money. It's just been a weird week. So, again, I don't know what the answer is, but I just buy when I feel like it's a good time. Look at a bit of Bitcoin news. We have a very important meeting that's going to happen. There's going to be a White House meeting of several important cryptocurrency people, including Michael Saylor from Strategy, aka MicroStrategy. We've got CZ from Binance, the platform. We got Brian Armstrong from Coinbase, Kathy Wood from ARK. They're all going to descend on the White House and put in their input on what is going to happen to digital assets in the US of A. So we'll see. Mexican billionaire Ricardo Salinas has allocated 70% of his portfolio to Bitcoin. That's pretty crazy. This guy has a net worth of $5.8 billion US dollars. He says that he's allocated 70% and he's committed to Bitcoin, himself, and gold, and that's it. He's got 70% in Bitcoin related exposure, 30% in gold, and gold miners. He doesn't have a single bond. He doesn't have any other stocks except his own. He believes Bitcoin is an interesting place to store wealth. 10 years today, look at this. 10 years today, the U.S. government sold 50,000 Bitcoins for $270 each. A $4.4 billion mistake. Just goes to show you sometimes the buy and hold strategy is the way to go. And then we see some silly posts, things like this. In 24 hours, there will be a major announcement from the White House regarding the U.S. Strategic Bitcoin Reserve. This may be the last time you're able to buy Bitcoin under $250,000. I think that's ridiculous. I don't think there's going to be any announcement tomorrow, nor do I think Bitcoin is going to 250,000 anytime soon. Eventually it will. Absolutely. In fact, I would go so far as to say that while there are a lot of people out there that want a Bitcoin Reserve in the US to pump up the prices of the cryptocurrency in general. I think it might be the worst thing to ever happen to the cryptocurrency world, to get the government involved. Anytime the government gets its fingers into finance, it messes us up. And I'm concerned that they're going to mess us up too. But I have no control over it. So we'll see what happens. The price of Bitcoin has been very volatile, which again could represent opportunities. I don't know, not financial advice, but we have seen the price of this Bitcoin doing very, very funny things over the last 1 month. Look at this. It dropped all the way down 78,000 US dollars, and then was back up to back up to 94,000. Right, in less than a week. You could have bought it down here. But again, when there's blood on the streets, people are afraid to make those kind of decisions. So, but those are often the best opportunities. See an interesting little piece of news here. I don't know if you can see this. Let me move it over for you. Hang on. Oh, no. Got to reject those cookies. Give me the news. Where'd it go? Hang on. Now it's disappeared off the screen. It said something about the, let's see if I can Google it. New Hampshire in the US. Bitcoin. This is very interesting. I'm actually really surprised about this. New Hampshire Bitcoin bill has passed through the House Committee in New Hampshire, the state of New Hampshire. 16-1 vote in a landslide. I thought all of these were going to get voted down because in certain states there has been voted down, including Wyoming, which was one people thought was going to get voted through. Now they're going to send this Bitcoin bill to the House for a full vote. This means that they want to have some storage of Bitcoin as a treasury. We'll see what happens. I think in a year we're going to have a very good outlook of how the U.S. is going to treat these types of things and whether this is actually going to happen. Whether it's a good thing or bad thing, I don't know. Again, I don't really like government involved in anything finance, but we'll see. What time is it? Well, we've almost been going an hour. I think that's going to do it. If you can hit that thumbs up button, that would be very much appreciated. I don't ask for much from you, but just hit that thumbs up. Let's see. Comment about my lighting. Peter Vince says, if I'm being picky, the lighting is now too far to my right, making the front of my face a bit dark. Is that better? I think it's looking good. I've got a light here on the side. I'll turn that off. Now it looks a little, that side is too lit. So I think this is about the best that I'm going to get it. Maybe I have to close this. How about that? Is that better? I don't know if that's better or not. Alan Stratford, 3.6 million of those fourth-way losses were on crowd property loans, which may have been rounding to 4 million. Why didn't they call crowd property out? Probably because crowd property is on their pay list, maybe. Who knows? Peter Vince, I'm in house, Martin, but while there's loads of data, I find the figures confusing. Annabelle, I've written to crowd property to ask for explanations of overdue loans, had no response, now even more nervous. Okay, I share that sentiment. Alan Stratford wrote to crowd property too. Dave says, what else is good to invest in? I mean, you know, that's a very broad question, but you could diversification, have some peer-to-peer lending. Have some stocks and shares. You know, if you can get property, maybe have a little property. I don't know. I don't know that property is such a good thing to invest in these days because it's so expensive. You get a good deal, sure. But if you're paying retail, I had a couple of interest shares in rental properties that I got rid of at the end of 2024 because I did the math after paying tax, after the returns on the property of the rents for 4 years and all the repairs. I think I made like 2.5%. Wasn't great. But, get yourself some Bitcoin. Have it all. Diversify. Yeah, definitely seems some of you are worried about crowd property. Norman said, worried about land investors while the last few loans have been outstanding for over 2 years. Happily, only a few £100 invested now. Poor communication. Okay. Yeah, they don't really send updates on individual loans, too. I'm with you on that. Assets capital, certainly worrying. Norman P likes invest and fund. Dave says, I do not think crowd property is going to collapse. I'm taking out more than I'm putting in. I do put the odd £50 in the auto lend on the select options. Some bargains on the stock market currently. Gold, yeah, I don't know. I personally, I don't. I guess I wish I had bought some gold when it was low, but I didn't. Who knows? Yeah, and look, everything is volatile. Let's be honest. Everything is volatile. We have a strange president here in the USA. Could turn out to be a good thing. May not. There's tariffs 1 minute. There's no tariffs the next minute. He's arguing with Zelensky, getting what he wants out of the deal. I don't know. Maybe in 6 months' time, things will settle down. You're going to see a more steady stock market. How do sensible Americans feel about Trump so far? Trump is very polarizing. You either are totally with him and love him, or you just can't stand the guy. So there is no middle ground. I don't think I've ever met anybody who said, he's fine, he's okay. It's always, I can't stand the guy, he's nuts, or I love him, I think he's standing up for the country. He's the first president to ever stand up and, look through the books and say there's fraud going on, we're going to stop it, we're going to cut out all the necessary spending. It's hard to know. Personally, I think all politicians are grifters, but who knows? Prove me wrong, Mr. Trump. Lighting is fine. Thank you very much. I'm glad that the lighting is fine. I know people in Europe don't think very highly of the American president, and I can understand why. He sometimes puts his foot in his mouth. There's some pretty funny videos that AI has generated about Mr. Trump out there if you want to giggle. But anyway, I'm going to get out of here. And either next Thursday or next Saturday. Probably next Thursday, but there's no guarantees. It's like the stock market. There's no guarantees with the live stream anymore. But I always let you know, if you're not signed up for the email list, go to financialthing.com. Put your name in, first name. I don't sell your information. I just send you an email saying, hey, the live stream's happening today or this evening and the time. So you get a heads up on when the live stream is. But thank you for tuning in. I appreciate you. Have a nice weekend. Hope you enjoyed the information. If you did, drop a thumbs up, subscribe, tell your friends and family, leave a comment on the video page. And I'll see you next time, okay? That's all that I have. Take care. Bye-bye.